Hi, this is Mike Richardson, owner of Alliance Home Mortgage, and I just wanted to give you a quick update on what's going on in the mortgage-backed securities market. I'm going to hop on over to the bond page and give you an update here really quick. So let's go over there now. And here's today's activity, what's currently going on. The mortgage-backed security that we're tracking is a Fannie Mae 30-year 3.5%. It's currently down 9 basis points. Things should, there's a lot of news coming out of Europe, which is theoretically going to continue to keep interest rates low. But what we're concerned about is possibly a reoccurrence of what happened back in October. And let me change the chart here and I'll show you. I want to go to a 6-month view here and show you what I'm talking about. So back in October, we reached this ceiling of resistance like we did yesterday. And basically what happened once we touched this ceiling of resistance as we did yesterday, the mortgage-backed security lost 200 basis points over a 2-week period before it saw a floor of support. And then you can see it kind of stayed flat for a few weeks and then started to improve again. We want to make sure we don't have a reoccurrence of that. Let me go back to the current page and I'll show you where we're at now. So yesterday, this is where it touched that ceiling of resistance, the same situation as back in October. You can see it couldn't sustain that price level and the price ended up pulling back down and trading lower within a tighter range. And we're kind of seeing how the price cannot sustain even again today. Currently we're down, well already it's down 16 basis points. That just changed from a minute ago. So we're going to want to keep a close eye on this. Even though we've got negative news coming out of Europe and it appears to be that way, again, we want to make sure we don't have a replay of what happened in October. Now, with regards to Europe, there's again a lot of negative news coming out of there right now, but something to keep an eye on and be aware of is once Europe starts to sort their debt situation out over there and things start to turn positive and become resolved, that's going to immediately affect interest rates over here. Interest rates are going to increase once Europe starts to work things out. So we want to keep a close eye on the news and track what's going on over there, as that's going to directly affect our interest rates over here. So currently we're recommending a lock status if it's short term, meaning if you're locking within a week to 2 weeks, we want to look at possibly locking now. And anything long term, longer term than that, 30 days or so, we're going to want to continue to float and watch the news coming out of Europe. If you have any questions, feel free to give me a call, and I hope you have a nice day. Take care.